Hello and welcome to the Fibonacci video for a Wednesday, October 25th. This is David and let's dig in. I continue to be focused on the S&P 500. I think that's going to give us our best indication of whether the general market trend is up or down. And one of our key reference points in that regard from a Fibonacci standpoint is going to be the Voodoo Fireline that of course incorporates very long-term Fibonacci uh, uh, projections and retracements between major long-term swing points, and we've got our fire line in the cash S&P 500 at 4083. And the index has traded above that level since mid-year when it found support. But we know that there's a lot of information in the way that price moves between these Voodoo Line levels. And in this case, while that support did send the S&P up above the 4352 snow line, that's the third most important of our levels, and the 4518 level, it's since come back below both of them, right? It ran into skyline resistance, came back to the lower snow line, bounced into resistance, the upper snow line, back down. Sloppy resistance here last week at this upper snow line, and we've gone back down. But below both of these snow lines, the Voodoo Line's roadmap suggests a path down towards the fire line. Now, the S&P doesn't have to take that path, but it's one that that we're warned to take seriously so long as we stay below these levels. So what would happen if we were going to turn back up? Well, likely use the skylines here at 42.49, 41.86 to generate support and get to and eventually through these levels. But as much as being below both snow lines focuses us on the fire line, right? We can now look at smaller degree roadmaps and look at what it would take to get price down towards the fire line level, right? And that primarily is going to be a right eventually or quickly getting and holding below 41.85. That's a level we ran into late today, right? We made an attempt on it Monday, got within about 4 points, made another leg down here today, and got down two. I mean, on a 1 minute chart, you can see a few flirtations below the level, but we held it basically into the close and pretty much closed right on it. But getting below leaves, as I said, the door open to the fire line. Now, from the lower skyline, could we bounce and retry the upper skyline, maybe even get a little bit above and still have a path downwards? Absolutely. Support above the upper skyline would leave a retest of the upper snow line on the table. So this is what I'll be watching. From an Elliott wave standpoint, from last week's high, I do think there are reasons to think that this leg down probably has a little lower to go. That might get us to below the skyline, but one needs to watch really closely to see how things behave afterwards. If it just jumps right up above, again, that leaves a path upwards. We need to see resistance below to think that we've got the fire line in our sights. Now, if we do get down towards the fire line, I do think there's a good case to be made that it breaks. And again, that's based on a combination of Fibonacci and Elliott wave, right? So if we sort of come in here and say, well, gosh, we've looked at this and said that if we break this level and hold below it, which I think there's a reasonable chance that we do, that there's a path down to the fire line. Well, that's also a path that likely takes this leg from September 1st, right? Or not likely, that will take this leg from September 1st to the spot where it's roughly 161.8% the length of this July to August leg. And that ends up being the proportion that makes us think that we're more likely in a trend move down, a larger 1, 2, 3, 4, 5 wave move down, which would break the fire line and would change the relationship to the most significant level in the area to being below the fire line, and that has some longer bearish consideration. So as we wrap up the Fibonacci perspective from for here, a few things that I'm looking at, right? I'm watching really closely these skylines and the related snow line up at 43.52. If we can navigate to above 42.49 and hold, odds are we get above that 43.52 level, which would be quite constructive in here. But if we can keep pushing down, the roadmap suggests a path down to levels, which would make this look more like we were embarking on a downtrend, and we get some important confirmation below 40.83. So those are the levels that I've got my eyes on, not as absolute, do we turn here at 41.86, but we allow for a bounce from there. But if it gets above 42.50, that's a problem. If we break it and hold below, that's that keeps the bears right on track. So that's what I have here for this evening. I hope you found it useful, and I will see you at the next update. Hey, David here with Simpler Trading. Thanks for taking a few minutes to watch this video. I hope you found it useful. And if you did, please help us out. Click the like button. You can also add your comments below. We love to read those and respond to them. You can also click the bell icon. That will alert you whenever we have new and updated videos. And if you want to watch us trade in real time with our own money, you can visit simplertrading.com to learn how to sign up. Until I see you again, as always, good trading, and we'll see you at the next video.